Let's be real, most of us have some kind of debt. But what if there was a way to make that debt work for you instead of against you? Well, today we're going to dig into a really powerful tool that can save you thousands and, maybe more importantly, put you back in control of your finances. We're talking about refinancing. So, let me just ask you this straight up. Are your loans, the mortgage, the car payment, those student loans that feel like they'll be with you forever, are they costing you thousands more than they absolutely have to? For a lot of us, the answer is a quiet and kind of stressful yes. And this is what we call the high interest trap. It feels like you're on a treadmill, right? You make your payment month after month, but a huge chunk of it just gets eaten up by interest, barely making a dent in what you actually owe. It's frustrating, it's draining, and it can feel like you're never gonna get ahead. But what if there was a way out of that trap? An escape plan? Well, there is. And the key to this whole thing is understanding refinancing. It really is the first step to taking back the controls. So what is it exactly? It sounds complicated, but it's not. Put simply, you're just taking out a brand new loan to completely pay off an old one. And the whole point, the secret sauce, is that this new loan has much better terms. That's where all the magic happens. And this isn't some weird, niche financial trick. It applies to the biggest, most common loans in our lives: your mortgage, your car loan, those student loans we mentioned, and even personal loans. The opportunity to use this strategy is probably sitting in your finances right now. All right, so let's get to the good stuff. How does refinancing actually put money back into your wallet and give you some breathing room? Let's break down the 5 key ways you can benefit. The number one reason people refinance is super simple: swapping a high interest rate for a lower one. And the immediate result of that? Your monthly payment gets smaller. That's real cash flow you get back in your pocket every single month. Now, this chart shows the long-term impact, and this is where it gets really powerful. Benefit number 2 is the huge savings on total interest. Just look at this example on a $200,000 loan. Dropping your rate from 6% to 4% doesn't just save you a little each month. Look at the massive difference between those two bars. Over the life of the loan, that gap is tens of thousands of dollars that stays with you, not with the bank. Benefit number 3 is a bit of a power move for when your financial situation has improved. You can actually refinance to a shorter loan term. Imagine going from a 30-year mortgage down to a 15-year. Your payment might stay about the same, but you'll be debt-free in half the time and save an absolute fortune in interest. That is the fast track to freedom. Okay, benefit number 4 is a game changer for your sanity: simplification. So many of us are juggling different payments. Credit cards here, a personal loan there. Refinancing can roll all of those high interest debts into one new loan. That means one single lower interest payment each month. So much easier to manage, and it saves you money. And finally, benefit number 5 is all about getting a good night's sleep. It's about stability. If you have a variable rate loan, you know that your payments can shoot up when interest rates rise. That's a lot of uncertainty. Refinancing lets you lock in a stable, predictable, fixed rate loan. No more anxiety, no more surprises. Okay, the benefits are pretty clear, right? But the big question is, when should you actually do it? Timing is everything. So let's look at the key signals that tell you it might be time to make a move. Think of this as your personal checklist. First, have interest rates in general dropped? You see it in the news. A good rule of thumb for a mortgage is if you can get a rate at least 1% lower than what you have, it's definitely worth looking into. Second, has your credit score gone up? A better score means you look less risky to lenders, which qualifies you for much better rates. Third, has your income gone up? You might be able to afford that shorter-term loan now and get out of debt way faster. And fourth, the big one for so many people, do you just plain need to lower your monthly bills? If you said yes to any of these, it is time to start looking at your options. Now hold on, just like any big financial decision, it's not all sunshine and rainbows. To make a smart choice, you have to know about the potential downsides. So let's be totally transparent and look at the fine print together. You've got to weigh the pros and cons here. First, there are closing costs and fees. You have to calculate your break-even point. That's the moment when your monthly savings have officially paid back those upfront costs. Second, be super careful about extending your loan term. Sure, a longer loan means a smaller payment, but you could end up paying way more in total interest over the long haul. And finally, yeah, the application will put a little ding in your credit score, but it's usually small and temporary. The main thing is to just do the math and make sure the long-term win is worth it. So, as we start to wrap this up, this quote on the screen really just nails it. When you use it the right way, refinancing is an incredibly powerful way to save money and just get a better handle on your debt.
But at the end of the day, this is about more than just numbers. Refinancing isn't just a reaction to financial stress. It's a proactive, strategic move you can make. It's about you taking command of your debt, your budget, and your future. It's about taking back control.
So, I'll just leave you with this to think about. A smarter, less stressful financial future is often just one good decision away. After everything we've talked about, could refinancing be that decision for you?